right, guys, quick mic check before we start. You should be able to hear us. We've got Bull and myself. Bull, quick mic check.
Good evening.
Awesome. Can everyone hear us? We've got hi. Should be able to hear us. Just a quick one. And then we'll dive into the new thread and all of the information that's been released in the last 24 hours and also the Medium articles that have been flowing out. It's been a lot to digest. Yep, everyone can hear us. Cool. Habibi can hear us. That's always good. All right. Well, let's get into it. So Lambda 2.0 Alpha, that's going to be the topic of today's stream, and as well as common questions that we've had and clearing up the process. There's been a thread that's just been released on Twitter. So that is quite important for everyone to have a look at and digest and understand. So I'm going to show that now and kick off with that. So Bull, lucky that we've got Bull here to share the technical side of things and how it's going to work, how it's going to roll out, and how the community can integrate with the build moving forward, which is a big topic. So Bull, did you want to start off with anything, or you're happy for me to just kick through this thread?
I just got the SSL certificate for alpha.lambda.markets. It's live with the placeholder. So Wednesday, we're going to replace it with access to the application, but you can already go there and see the placeholder site for the moment.
Yep. Cool.
Does it work?
I'm just loading it up now. Okay. There it is.
All right.
This is alpha.lambda.markets. So you guys can go there and have a look, type it into the browser. It's now live. So like Bull just said, it's going to be
it's not much to see. It's just a placeholder for the moment, but we are developing around the clock. So also throughout this stream. Good to dive into a couple of things. I think it's a lot easier to share stuff in voice than to answer hours and hours of questions. And people can just sit back and listen and take notes. Yep.
Yeah, sure. And it'll obviously be recorded and kept on the YouTube channel for forever. So strap in. We're going to do a deep dive into the thread that's just been released on Twitter. That's on the screen now. And walk through each tweet, what it means, and make sure that everyone digests it and understands the common questions that have been asked. So Alpha Access is going live on the 11th of January 2023 at alpha.lambda.markets. That's now live, just with the placeholder website. Whitelisted accounts, the 1,000 whitelisted accounts, plus those who participated with some criteria in the Lambda token portal can access the alpha version and help us build it along the way. So who's eligible? It's existing members, of course, the IDO participants who have contributed over 1,000 or 1,000 or more USDC to the token portal, and all whitelisted accounts, like I've just said. So the main thing being that of the 470 or more now community support tickets that we've resolved, the most common feedback has been, why can't we get access, and how can we get access to the product? We haven't seen it, particularly from whitelisted. That was a theme throughout whitelist process and even up until this day. So that's going to be happening on the 11th of January.
I apologize in voice. I petitioned towards Ted and Hoss to make this change. I understand it's very undesirable to make last minute changes, although I would never not want to work somewhere where we cannot adapt things and have to think things out perfectly from the beginning, because you simply can't. I've tried my best to answer all the questions in the Discord. I know that we're gathering a lot of information from all of the answers, the more salient points, and then putting them in a digestible format. We've also talked internally about lowering the $1,000 threshold, but that brings a whole set of new problems, which is what about all the people that have added a bit more in order to get to that 1,000 level? That's not fair to them. And also, one thing that we know for sure now is that definitely no further changes should occur. So that's a difficult one. We're still thinking about how we can do that, because I understand it looks like I've seen the words cash grab and other things here and there, but for us, it's really not about the money. It's more about having something that's available for people that are serious. And that seemed to be a logical level. Obviously, we'll be sharing a hell of a lot of screenshots. All the thousands of people that have access will be able to share information and insights and corroborate things. But just so you know, you're getting access to a work in progress. So it is alpha version. It's not even beta. It's you're going to see the thing being built up live and all the features being migrated into it and feedback being incorporated in real time. So it's we're taking our jackets open and we want to run as transparent as possible process.
Yeah. So jumping to this screen to I guess explain it. This is down the line in a few tweets further, but so we're starting off at number 1 here in the charting phase. So on the 11th, you'll have the strike algorithm, the charting plus the watch list for the top 50 volume coins. And throughout the course of the alpha access, this will be iterated on each day, basically. So you'll see them happening live, changes in the portal, in the alpha version, and that will happen daily. We'll all communicate updates on what's happening. Versions will be rolled out as they're completed, and you'll move towards the end of the alpha phase where alerts, Telegram are almost integrated, and we're gathering feedback from you guys every day, incorporating it and developing in a live environment to squash any potential bugs and make sure that we're smoothly rolling out to get to the 25th and launch to the public. So 1 is charting, the first phase on the 11th. 2, between the 11th and the 18th, is the advanced charting that comes with the unlimited timeframes, the order flow overlays. And then between the 18th and the 30th, the focus will shift to alerts and Telegram integration. So that will be moving towards the alpha close. So if you can digest this screen here, the top is the alpha access, what's happening along that flow towards the 25th. And then after the 25th, we shift towards the full-scale rollout and the public launch. So that includes the customizable alerts, which will be, pretty close to being ready by early February, but allowing that period of time for integration of you guys, the feedback in the alpha version, and ensuring that we're optimizing up to public launch, and then a full-scale rollout post the 25th. So hopefully this graphic here explains what to expect in the alpha versus the roadmap post alpha.
Yeah, I think it's good to note that we encourage active feedback. Also, just make a ticket, write down constructively what you see, especially if it's a bug. We're obviously not going to be able to answer every single feature request, but we will consolidate the more popular topics and then work that feedback in. It's an exciting way to get lots of feedback from people early on. It's good.
Yep. Go back to the thread. So it's here. So I think we just explained most of that. The platform in real time to providing valuable feedback, squash any bugs. Like the optics around this, we've spoken about this in the Discord. For those that aren't in the Discord and are following along on Twitter, extending the token portal may seem unfair. We understand that. In the interest of, first of all, transparency and helping users who are on the fence and haven't used the product before, or seen the product in action, we want to get as many of the 90% of the total Lambda token supply. We only have one opportunity to get 90% of the float out. It's not going to happen again, into the hands of users, and I guess not so much speculators. We understand that speculators are going to be there. It's an investment as well for some people. But to really stimulate a healthy token market from the start, we want users to have the majority of the supply, because this is a very unprecedented token model. It hasn't been done before, as far as I'm aware. I'm not sure if you've seen anything like it, Bull, but 90% of the float is a very, very significant portion of tokens, and getting that all out at the start comes with its pros. Yeah, the team doesn't have any allocation. There's no VCs. There's no overhead pressure from whales, I guess. But at the same time, that leaves a big gap between those who are using the platform and allocating for the platform use, and those who are throwing in a big load to speculate and trying to double their money or whatever they're
I've
doing.
seen a handful of complaints, but in the end, I think we made the wise choice to think longer term instead of trying to make it moon in the short term. Our objective is not to make this token moon. We want sort of a healthy value appreciation that is one-to-one reflected by new capital entering into the market. And the only way that's going to happen sustainably is if we make a good product, if we get new users in that have to buy tokens off the market to get a subscription, and they buy those from existing token holders. And in the first cycle, that will be purely IDO participants and none of the team or the vault.
Yeah.
And I think that the good thing about this is that if you think about where the value comes from, it doesn't come from speculation. I think that speculators can help in the short term, but in the long term, what helps is a good product. And if we get more users in and quality users in, those guys are going to provide feedback. Those guys are going to use the referral system. They're going to get friends and buddies on board. We're going to run promotions and have temporary discounts and so forth in order to increase the user base. And that will attract more eyes to the token market in and of itself. So if you are speculating, I don't think it's a bad idea to hold on to the tokens. But obviously, if you disagree entirely with this strategic decision, that's obviously your right. You can do obviously with whatever you want. And we'll try to make sure that there's sufficient liquidity at the start in case you want to sell the tokens. Which might lead to some interesting dynamics at the start. But the people that are in this in the long term are the people that we are mostly catering for. So every decision is engineered with those people front and center in mind. Also, like a decision like this to change the dynamics, especially at this stage, was not taken lightly. So don't think we did this on a whim. This was very carefully considered, and it was a request put in by me because I want to spend the coming year, 2 years building something that is seen as something of quality and not a rug or some sort of scam or whatever. This is like a fully fledged platform that we want to build. I was speaking in the foundational channel earlier, is that future stages and like the big moon visions is currently the DEX experience on Solana is quite crap, and we can use the design skills and the technology that we've built up to introduce better technologies in that. And that's the kind of future that I'm looking towards, not short term, can we pull a 3x or a 4x? I mean, I don't really care about that. It's for none of the three of us, it's about the money. It's about the chance to create a healthy operation, get investment from the end users, so not VCs. So you guys that are contributing USDC to the token portal, you're not just buying a token with the hope that it moons. You're literally investing in a business that has a mission and a vision to grow into something much bigger than it is right now. And you're making that possible. I mean, if we look at the contributions so far, I think we're a little bit over 1 million, I think 1.1 million. That's a fantastic amount of new users. It's a fantastic amount of capital to start a good development trajectory. And I think that it's something that we can work with very well. Any additional USDC is obviously welcome, and we'll use that in good faith. But I'm very glad that we chose for this model because it's a hell of a way to get a bunch of new users and feedback on board in a very short period of time. Any traditional startup would have sold their mother for a model like this. So I think that's something that crypto makes uniquely possible. The sad part is, and this is the last thing I'm going to say, is that crypto is not very well suited to last minute decision changes or flexibility. And that's a sad thing because and I get it, there's a big concept of immutability built in to the ecosystem, and we want to keep it that as much as possible. But that will rub and brush against the nature of a startup, and that's to change things fast and break things essentially. So last words are profound apology from me, but I firmly believe it's for the best of the project. So thank you for your patience.
Yeah. And I think it should be quite clear, I don't know, the tokenomics models of most crypto projects, floating 30% of the supply at the start, holding back this other 70% for selling down the line. You don't have natural price appreciation. All you have is overhead sell pressure for perpetually. And this model, I hope people can see that is built for sustainability of a token market and not so much the initial moon and then gloom that follows.
Yeah.
But anyway,
I think a lot of the focus of our communication from here on out is going to be less on the token market and more on the actual platform,
More
the
on the-
features, and the
exactly.
roadmap.
Yep. Cool. So we've touched on the roadmap. There'll be 4 distinct phases for the alpha process. That is the charting rolled out initially, the strike algorithm, the charting plus watch lists of the top 50 coins. On the 11th, the advanced charting moving between the 11th and the 18th, integrating alerts and Telegram for the next phase, and then closing the alpha and moving towards public launch, and then rolling out the full-scale app by the end of February and maybe into early March, just down the bottom there. So that is hopefully a pretty clear timeline for people, and maybe it wasn't so clear previously. So that is in the Twitter thread. It's in that the Discord as well. So please.
I was just thinking, Ted, is that we need to. Obviously, people are going to commit tokens in order to get a subscription, but we need to have a reduced price in the beginning, I think, in terms of subscription value, as the platform will become fully fledged over the course of February. It will start off well and useful, but I think that we need to make sure that it reflects in the subscription price. I think it's similar what we did in the initial release of Lambda 1.5 years ago, is that we initially had reduced prices for Pro and Basic, and then ramped that up as more and more features got released. And I think that's a healthy way to do things.
Yeah, let's investigate that and keep that topic rolling. I agree. So we could do something like where we've got the multiplier. So the multiplier will be applied post-launch, but for the launch multiplier and activation, we can have, say, instead of a demand-based, when demand's really high, go 1.01 or 2 or whatever we'll do, have it at 0.95 or 0.9 or 0.8 of what the subscription price is, to really give the benefit to people who want to use the platform from the start. Cool. So that's it for the Twitter thread. Let's dive back into the Medium articles, because there's been quite a few released over the course of the last 2 weeks. Staking is probably a good one to go through, because that comes with nuances, and Bull, you'll be able to explain the technology behind it and how the mechanism of gaining discounts and referrals particularly will work, because that is quite a powerful mechanism for the community, for growing the platform and engaging new users, as well as giving back in some way to early users who have jumped in and got a referral link and are now bringing other people to the platform.
Yeah, I mean, I can, give me 1 second. Sorry, I just need to answer this thing. I'm just getting a message in. I can talk about the nature of staking, and I can talk about the technology of the staking contract, but I think that you can cover the dynamics a little bit better of how it benefits the users.
I'll walk through it now, and then we'll flow into it.
Yeah.
So staking was released, the article was released yesterday. A Twitter thread will come, and it'll probably be an abbreviated version of what you see here. So to extend the utility of the token, holders will be able to lock up Lambda tokens via the web app for 30 days, 60-day, or 90-day epochs. So epoch just being a period of time on the blockchain. And as those periods roll over, tokens will become unlocked, and they're back in your hands. You can do whatever you want with them. But the benefit of staking for a longer time is, you're getting the full benefit of the rebates and discounts for the platform. So I'll go into that and explain what that exactly means. So in the web app, you'll have something that looks like this: your stake, how long, and the rewards that you will receive, rebates. So it'll be a tiered discount system. In the user interface, there'll be a referral link, much like other exchanges or products that you might have used before, even extending to real world things like you see your typical influencers sharing referral links, get 5% off with my discount code, or
we'll add like a QR code to a profit and loss card as well, stuff like that. I mean, it will be a good
referral link that gives your friends or family or whoever it is a 5% discount to sign up to the platform, which then any action that they perform on the platform will see you entitled to a rebate as long as they're activating tokens.
Yeah.
So if they activate Lambda tokens, you're entitled to a portion of whatever they're paying. So we'll go through the tiered portions shortly.
I think that this is a nice feature because referral systems are always what is not good is people shilling referrals on Twitter and so forth endlessly. That has a bad connotation. But in and of itself, the business decision of a referral link is actually really smart because you compensate people for actively using the platform and promoting it. And especially if you make the rewards decent. So the more you stake or the longer you stake, the higher the rewards. And the benefit is that new people come on board and they get an experience of, all right, I got this app at a discount, especially if the discounts are serious. But what's even cooler is that you take a bit of the supply off the market, and that reduces the amount of supply available for people to buy subscriptions. So it's got like a double effect to it. The other benefit is that people will specifically be looking in dips in the market to buy tokens at a heavy discount because they are not dependent on the subscription price, and then are just able to lock up more tokens. So the whole system has been engineered towards should the token price drop because, I don't know, speculator Bob A doesn't like what has happened, sold his tokens, price has dumped a little bit. A lot of other people can then say, oh, well, thank you very much, Bob. I'll buy those tokens, I'll stake them because I'm not in this for short-term gains. I'm in this for long-term gains and trying to make the platform better. So you kind of start seeing that every decision is geared into this direction.
Yeah. Perfect. So that's in a nutshell, what the staking will be. Referral links grant new users 5% of subscription prices. 5%, that should read 5% off subscription prices. I need another F there. I'll fix that. So the flow, I guess, for those that aren't familiar with staking or haven't staked before, a Lambda user will acquire tokens, lock them for a selected epoch, being a 30-day, 60-day, or 90-day, whichever they choose. And that will go to the Lambda staking contract, and it will stay there locked, not able to do anything for that total epoch. And in the meantime, while that's happening, the user who has staked their tokens will be entitled to the tiered discounts and rewards or rebates on the platform. And then when the epoch ends, the Lambda gets sent back to the user. They forfeit their discounts and rebates, but they get their tokens back. And they can choose to restake again or whatever they want to do.
Yeah. We're going to be releasing more dynamics of the smart contract later on. We'll also make the staked tokens tradable. So if you've staked 90 days and in 45 days, you, for example, have a family emergency or whatever, and you've staked a serious amount that you need to liquidate because you need some funds or you have a wedding, which actually happened, then that will be possible. And to answer Simon's Krause's question, how would you make sure community doesn't dry out? The prices are in dollars. So even if the token price is really high, it just means that they have to buy less tokens. And that encourages people to sell again. So that brings the price a bit lower again and encourages the circulation of the supply. It's a double elastic mechanism that on each end of the elastic should bounce it back to what the market deems is a fair price. I hope that answers your question.
Yeah. Perfect. So the prices are locked in US dollars for subscriptions and platform features. The number of tokens will change, not the US dollar amount. So that's the important point there.
Yeah.
Getting on to where do the rewards come from? I'll show this in the article now, just moving back to the tab. So I'll show you the tiered discounts and rebates and how it works. But there's a worked example here. So using the 90-day example, trader A has $500 US of Lambda tokens. This is a worked example for referral rebates. So they have $500 of tokens locked for 90 days. So this gives them tier 2 status and the following benefits. So if we look at this table here, how do we work that out? So they have $500 of Lambda staked. Go to the stake column, they have $500 staked. they're tier 2. Tier 2 is entitled to a 20% discount on platforms features. So that can be any features that need to be activated, subscriptions, future feature marketplace features, staked only features, etc., which will come as the platform rolls out. But the important one being subscriptions, the big part of our platform. So they get a discount on there, 20%. They get a rebate of 25% if anyone uses their referral link. So if anyone uses their referral link to purchase tokens and activate the tokens, the user who has staked in this scenario gets 25% of whatever tokens they activate in the vault, which you can see as you stake more tokens can become quite lucrative if you've got the future in mind of what you think we can potentially build and what we can deliver. So you can get up to 60% rebates on your activated tokens from referral links, which is quite insane. Yep. The reward that you see here is purely for every 10 annual users that you refer, you would get that reward. So taking an average of 70% of users who go to annual, they'll get the base at $1,000, and 30% of users go for a pro, roughly. It'd be somewhere around there. Taking that rebate into account at each level for 10 users, that is the US dollar reward that you would get. And the subscription cost at each level. So taking into account the discount on subscriptions, a pro annual subscription, that is what you'd pay if you'd staked for each tier. So the pro annual would cost you $1,500 at tier 0, obviously no tokens staked, but at $500, it would cost you $1,200. So you get a 20% discount for tier 2. Just worked examples in those last few columns.
Just getting back to Andreas Wieser's question, you will always be the owner of your keys. It's your coins, your position. Nobody will be able to touch them. I've built staking contracts before where over 85% of the supply got locked in and nothing has ever happened to them. What happens is you get a redeemable token back, which is like the 1-to-1 or 1-to-X redeemable token for your stake. So if you don't have the stake, you have that token. So you will always be the owner.
Yep. Cool. So quickly, just back on this example, I'll work through it now because I think I've explained it. So Trader A has $500 locked for 90 days. It gives them tier 2 status, which gives a 20% discount on features and 25% of fee rebates. So whenever someone uses the referral link to activate platform features with Lambda token, they'll get 25% of that. So a scenario, Trader A has a friend named Trader B who is wanting to join Lambda. Trader A suggests that Trader B use Trader A's referral link. Now this could get a bit confusing, but please read it yourself. For a 5% discount. So Trader B wants to use the referral link because he gets a 5% discount on the subscription. Trader A knows that he's at tier 2 status because he's locked $500 of Lambda tokens, and any user that uses their referral link will give them a 25% rebate paid to them in Lambda tokens. So that process will go through now how that works. Trader B uses Trader A's referral link and purchases a pro annual subscription to Lambda 2.0. Total cost is $1,500 US, and this is paid in Lambda tokens. Trader B activates the Lambda tokens in the vault. This now means that Trader A receives 25% of the $1,500 that their friend or family member spent to activate a subscription. So that means that 25% of $1,500 is $375 owed to Trader A because Trader B used the referral link.
So can I ask a question?
Yeah.
So let's say you stake a $500 worth of Lambda tokens and the price drops by 50% because Binance rugs everybody or whatever, right? There's a market panic. What happens?
What happens? Sorry.
So
if the price of the tokens drops.
Yeah. So you're talking in dollar values of tokens, but that obviously fluctuates with the market.
It's at that moment in time. So
okay,
when they're staked, yeah.
Because they make that decision at that point to lock it in for an amount of time.
Yeah.
Okay.
Exactly. That's probably something I should have written in here. Good question, Bull. Trader A will then receive $375 worth of Lambda. So they get Lambda tokens in rebate from the Lambda treasury, which will share the wallet, or Bull, technically, maybe that will be the vault. We'll clear that up, but they'll receive Lambda from the treasury, but they won't receive the liquidity providing tokens. Lambda will buy back $375 from those US dollars that are used to activate the tokens and send them to Trader A.
Yeah, we don't have a
Trader A will
treasury because we're not a DAO,
Yeah.
but it will be in the
Yeah.
vaulting mechanism. Yeah.
Yeah, exactly. So then Trader A can increase the total percent rebate that they receive from referrals by staking more Lambda tokens according to the tables above. So going back above, you'll see the differences here. So if we go to the 90-day staking, the multiplier is 1. So you get the whole discount or whole rebate that's available just there. And then there's a multiplier on 60 days. So you get 0.75 of what is available. So that drops down a little bit. The rewards are less. The subscription cost is more. And then 30-day, it's a 0.5, so half of what the 90-day rewards and discounts would be. So that's hopefully explained what staking is and what it will be when it's launched in February. Bull, anything to add there? Any more questions?
No, I think that staking, whilst it sounds like a simple thing, it's actually very complex. I think the last staking smart contract I wrote was, I think, about 3,000 lines of Rust, and that's a lot for a smart contract. That's not funny. Yeah, we try to do them as simple as possible, and in a way that people can still work with the value of the staked tokens, even though they are staked. But the point of staking is committance of the people, and to make sure that supply is off the market, and then they should be rewarded for that supply.
Yeah, perfect. Cool. So where was the question that I wanted to bring up? P. Van Groben said, where do the staking rewards come from? So it's literally from other users and from us as discounts. So sacrificing the total value of subscriptions or platform features in US dollars comes down if you're staked. So the staking rewards for that just come in the form of a discount. And then for referrals, they come in the form of rebates from cash or capital that's flowing in, flows back to the referrers.
I think Paul Graham had a really great formula about this. It's just like 1 over 1 minus n, or 1 over n minus 1. I'm not really sure. But essentially what it means is that we take a big hit on revenue, but we get compensated by the fact that it encourages new users to come on board. So whilst the slice gets smaller, the pie gets bigger. And then that a serious part of that value should return back to the people that do that work, essentially.
Yeah. And the good thing about this model is that there's no inflationary component to the token. So typically with staking, you get rewarded in tokens, which you do here, but they're not coming from a pot that hasn't been added to the circulating supply already.
Yeah.
So everything's already circulating. It's just going to different hands. And the burns are happening at the same time. So when tokens are activated from new users, there's going to be rebates there. And there's going to be a burn component. And it doesn't impact the inflation component of the token supply. So that's quite important.
Thank you, Mr. Gruben.
Cool. I think that might be it that I've got to share.
On staking.
On staking, yeah.
Yeah, well, when this comes live, I think that the features of the platform are first priority, and when this is live, it will be there will be another town hall guiding people through actually using the staking part of the portal, etc.
Yeah. So little roadmap of what we've got to come. A few threads. We are on the 6th. Alpha access opens on the 11th, and then we've got DEX trading, which will be quite good for those looking to get on chain and haven't used on chain before, or DEXs.
That's a lot of fun.
Quite a good one. Yeah. You see the order books in real time, and you really see how order book liquidity works.
It's a lot of money to be made on illiquid DEXs if you know what you're doing.
Yeah. I saw something on Twitter. It was like someone deposited, what was it, 50 Sol a month
Yeah,
ago,
50
and
Sol
now the
turned into
account's running at
180K.
180K. So
Yeah.
50 Sol being maybe $500 or sub 1,000.
There's like leaderboards out there.
It's
There's
180K.
Yeah, there was this Mev bot. I think it started in September 2021, and then it ran the first week. It ran, I think, like 5K USDC in profit, like completely, or quote unquote riskless. Not really riskless. Nothing is riskless, but and then it worked itself up, and I think it was, in the end, it was running like 3 or 4 million a month or something like that. That's super advanced, like that's for example, atomic arbitrage and so forth, and that kind of edge always disappears very quickly because people basically swat accounts that grow unnaturally in value. But if you look at illiquid pairs on Sol, for example, on a centralized exchange, you will get a natural direction. So you're bullish on trend. You think that the price is going to go higher. On an intraday level, you think that the coming 5 days it should expand. You want to buy the dip. Now, where you do that is not on a centralized exchange, but a decentralized exchange. You place stink bids because the order book is far more transparent, and then you get these wicks that come straight towards the price that you're putting there. It's quite hilarious. It's the same token that you can then transfer to a centralized exchange.
Exactly. I just want to show something on OpenBook that we were looking at earlier today. If I can get the chart up of Solana to explain what you're saying. So,
do you want me to send you I think I sent it in the foundational channel. So
it wicked to like $11 today.
Yeah.
Something. Anyway, let's share this here. Share this tab. Can you guys see that? So, the order book for Solana USDC is here. This is the on-chain order book. So you got owner wallets here. So Jump being a big market maker. You got the trade history. I can't get the candle chart up for whatever reason, or maybe it's.
No, you have to go to like if you go down to the scroll down the page, and if you go to open Lionfi or MarginFi, either of the two, under market information, you have trading.
Oh, sorry, get one of the dexes, yeah.
This is a huge opportunity in Solana. These portals are complete shit, to be honest. But this is a fun one to see.
Here we go.
As well.
Yeah, so you can see here.
Yeah, so if you do 1,000, let's say the price is 12, if you do $1,000, that's $90 for free, essentially. Here it would be a bit more than 100.
It's insane. So the wick down into $11. Someone just totally.
Those are mad ways to get like instant 10% or something, and this happens quite frequently. Anyway,
and that's not a small candle.
Trading,
it's
not features.
5K.
Yeah. And it's also manageable amount. Well, it depends on who you are, obviously, but it's not. You don't have to have millions to catch these kind of moves. It's more in the thousands or the hundreds.
Yeah, you can see how thin these books are. Like, the spread is just insane at the moment. But at times where it definitely pays to check what the difference is between sexes and, say, Jupiter. At the moment, Jupiter being the aggregator of different routing on Solana. So just to go through and show you Jupiter aggregator. Yeah, it's a good idea to go. I don't want to share that. USDT. So say, for instance, check what USDT is paying, how many Solana you'll get where, and compare that to what you'll get on the centralized exchanges, because sometimes on-chain is actually giving you much better value for your money than what centralized exchanges are because of that liquidity in the books at the moment. It's something that hasn't been
if you set a limit
present for a long time. Yeah.
Last thing on this, and then we should move on, but a lot of liquidity is being routed through Bonk. So this means that the Bonk USDC and the Bonk Sol markets are so liquid that they are more liquid than the USDC Sol markets. So Jupiter will route USDC through Bonk and then into Sol, because the connection markets are more liquid, which is crazy if you think about it. It started as a meme coin. Anyway.
Yeah.
Let's keep going.
Market makers are doing a job there. Cool. So let's get back to Lambda. So staking, I think if there's any questions on staking, please hit up in the chat. There hasn't been anyone really shouting yet, which is good or concerning. I'm not sure.
We'll get some good questions, I think. Nokek
Yeah.
is doing an awesome job as well.
Yeah,
And
yeah.
Legends.
Got some legends in the Discord. So Bull, is there anything particular you want to touch on? Because I think most of the content I had planned has been delivered.
No, I think that's that. I wanted to spend some time on the decision that we made, and I think I've covered that in detail. Again, it's going to piss off somebody, and I'm terribly sorry about that. But you're going to have to either trust me that it's better for the team and the product in the long term. Yeah, or not. It's just the way it is at the moment. Yeah.
Cool. If there's no questions, we might leave it there for this evening. But what you can expect in the coming days, please check out that Twitter thread, the roadmap that's been updated for alpha access. Prepare for alpha access if you want to get in. And like always, we'll be answering questions in the Discord and doing our best to be there and make sure that we are answering questions.
I mean, I'm going to do my best to be in the Discord as much as possible, but I have a lot of development work to do. So I'm sorry that I won't answer a question immediately, but I'll do my best to answer the question as best as possible. Also, for people that want to have access and don't have that $1,000, please be aware that we are still thinking about a solution, even though we don't want to introduce any more changes because we've seen the immense adverse reaction to changes in the middle of the process. So don't worry, crypto por vida. I'm sure that we can work something out. But yeah, hang tight.
Cool. All right, guys. Thanks for tuning in. Thanks, Bull. We'll be in the Discord.
Yeah. It's more of it's
All
not
right.
what is this, a town hall or a live stream? It was more like a chatting session.
That's what it usually is.
Yeah.
I think
all right. Good night, mate.
We got quite a bit of information out, so yeah. Hopefully
back to the code.
It's been insightful. Yeah. All right, guys.
All right. Bye-bye.
Bye for now.